How goes the family? Welcome back to Patterson L Properties. Hopefully you guys having a great and exceptional day. All right, let's get to it. All right. So the Fed cuts, for the most part, won't really change the housing market that much, family, in 2025, going into 2026. Just because so many houses on the market could remain at a high prices over $500,000. And then bear in mind that a lot of the sellers, before I even go forward, a lot of today's sellers and whatnot have borrowed against these houses enough that they want to recuperate something or have and put so much money into these houses that they want to put they want to be able to say, okay, walk away with from the table with something, unless they're just a desperate seller and or a tired seller, tired landlord, and they're just like, hey, whatever, make me an offer, and if it's feasible to me, then I'll go with it because I don't want this property anymore. So, but for the most part, until the prices come down, then a lot of these houses are going to remain around, as far as on the market. But anyways, also, let's remember, the jobs report wasn't the greatest, meaning that the country only added a certain amount of jobs that wasn't to a lot of people's liking. The article that I read the other day stated that pressure is growing on the Federal Reserve and Federal Chair Jerome Powell to cut its benchmark interest rates next week, following a stunning new provision to employment data showing the labor market is much weaker than previously thought. And let's be honest, the United States economy right now isn't in the best shape. Mass layoffs are happening. Artificial intelligence, known as AI, is taking jobs, and corporations are doing their best to offset anybody and anything in order to stabilize their corporations, or definitely increase the profit margins with the corporations. Corporations are going into default. Car prices are through the roof. A lot of cars are not selling right now. So why would anybody really and truly want to purchase, and I'm talking about your everyday regular working family, want to purchase a home unless they are a part of the financially well-to-do class? A lot of regular everyday working people are not a part of the well-to-do class. And then bear in mind, a lot of people feel the uncertainty and think things are shaky, so they might as well just stay where they're at right now, especially if they're in a decent situation. So that's just something to take into consideration, because Gen Z, we thought that my generation, the millennial generation, was going to be the first generation that couldn't afford to buy homes. But no, Gen Z is definitely the first generation of young people in their 20s who cannot afford to buy a house right now unless to come from a well-to-do family. The ones that got a skilled trade, the ones that are doing well for themselves, unless they decide to move like 15 people into the house in order to split the bills and live like they just came to the United States and whatnot. Even with the 5,000 to 10,000 price cut, this isn't making it much more feasible for prospective home buyers who actually buy a home in a decent neighborhood at an affordable price, because there's certain neighborhoods that certain people can afford to buy a home in, but do they really truly want to live there? Most likely not. It's known as the downtrodden hood and whatnot, where it could be in a small town or a major city or a major suburb. Depends on the situation. All right. The article also stated that what we are seeing in the labor market reminds me of stagnation that we've seen in the housing market this summer as home sales remain low. I've said this 1,000 times. I receive various amounts of emails this last month alone of houses for sale all over this country, and the inventory is on the rise. All right. Chief economist Danielle Hale stated that it's far from catastrophic, and I agree with that, but it does create an environment in which many feel stuck and are frustrated or disappointed with the outcome. The staggering annual revision of a labor market data follows concerning corrections to monthly jobs reports in the past few months. Employment growth in June was initially reported at 147,000, but is now estimated at a negative 13,000 after two downward revisions, meaning the economy actually lost jobs that month. And even six-figure salary buyers are not comfortable with obtaining additional and unnecessary debts like purchasing a home. Some would even say that in certain circumstances and aspects, the American middle class is starting to disappear. The article ended on this note saying that the Fed uses higher interest rates to tame inflation and lower interest rates to stimulate job growth, to the two halves of its dual mandate. Although the Fed doesn't set mortgage rates, those rates can move in anticipation of future Fed policy and financial conditions. Mortgage rates have been falling in recent weeks in anticipation of Fed rate cuts, with the average 30-year mortgage rate hitting at an 11-month low of 6.5% 6.5% last week. According to Freddie Mac, a surge in inflation could complicate the Fed's decision on rate cuts, making it more difficult to ease monetary policy, boost the labor market. But remember, a lot of what was just said, specifically in that last sentence I just said, the labor market will never be the same because we're living in a time of AI. And because, and this isn't political, this is all purely economics. If somebody else was in the White House, I'd be saying the same thing. So I can't stand politics anyways, on either side of the aisle. But anyways, another thing is, so you're combating it with corporations are combating it with AI. People can't afford certain things, so a lot of people you have a credit card crisis bubble. So therefore, you have a lot of people that are not purchasing as many goods and services and whatnot. It's from one perspective, because we live in a consumer-based economy, we're just purchasing things out of necessity. So with that being said, at the end of the day, how are you going to increase profit margins if people can't afford to buy your products and services? How are you going to be stabilized if you can't get a job or maintain a reasonably paying job? These are all good questions. I don't have the answers to them. We'll just have to see where this thing goes in 2026, since the year is basically almost over with. Could be a good, if the prices do finally come down, there's a possibility of that happening, then we'll see what happens. All right. But anyways, I forgot I have an appointment, so give me 1 second. Hello, hold on 1 second, please. Okay. Thank you. So on that note, family, do the great 3 things, like, share, and subscribe. Have a great day. Don't forget to check out my online website, Patterson L Properties. We wholesale real estate in the DMV area and Pennsylvania. Check us out. We'll go from there. If you're a stock market investor, crypto investor, individual, retirement account investor, don't forget to check out WEBULL/acornscrypto.com, Coinbase. All those platforms, you'll be able to invest your money, and I'll be able to get a residual from your signing up with those specific vendors. All right. So do the great 3 things, like, share, and subscribe. Have a great day. Make money moves, or you can live like a fool. It's in Spanish. Bienvenido a la vida. Welcome to the life. Remember, you can't get fired if you own the company. It's 2025 going to 2026. Time for you to own something. Take care.